What's up, guys? It's Bao here. Welcome to my YouTube channel, Invest with Bao. In today's episode, I will share with you an alternative REIT, American Tower. Let's cut to the chase. How American Tower comes into my radar is because of 5G. And this is a summary of today's report. Okay, all the hot topics that we know, such as driverless cars, smart cities, IoTs, they all rely on one very critical factor, which is 5G. And looking to 5G with its increased frequency of signals, higher frequency signal will be significantly reduced when it penetrates anything, glass, wall, or just anything because of high frequency are more sensitive to reflection. So they will have a harder time passing through walls and obstacles. This means that we need to increase the required density of cell towers in order for those high bandwidth connections to be available. And tada! American Tower is one of the two largest providers of cell towers in the US and also operates internationally. This is an overview of this report. Now, let's first look at their business. American Tower's business model is very simple. They basically buy or lease land to build towers or buy towers from other tower builders. Then they will lease the towers to telco operators such as AT&T, Verizon. And telco operators will have usually there will be a long-term lease with automatic escalation. Telco operators owns the devices while American Tower owns the structures. American Tower communication sites has over 70,000 locations worldwide, of which more than 70,000 are in India, 40,000 are in US, over 16,000 sites are in Europe, and Middle East and Africa, and nearly 36,000 sites in Latin America. American Tower capitalizes on the growing wireless penetration, increasing mobile data usage to grow their revenue. The growth of mobile device penetration is expected to remain strong through at least 2023, and this is good news for American Tower to continue to grow their earnings through their network deployments. Now let's take a look at the past financial performances, and it is stunning. For the past 10 years, American Tower has been growing its revenue, EBITDA, AFFO, ROIC at double digits. The important point to note that its ROIC has been growing at double digits, while annual dividend growth is more than 20% since 2012. This is truly very impressive. American Tower's growth strategy focuses on improving existing operation margin, grow portfolio, innovation and enhance industry leadership. I will elaborate on improving existing operation, which I feel is the most important for American Tower. The most important growth strategy I feel is by maximizing tenant space in the existing tower, and this is why. With more tenants on the tower, the revenue multiplied, as you can see from here, 20,000 for one tenant and 80,000 for three tenants, while the expense remained low, 12,000 for one tenant and 14,000 for three tenants. Because of this, the margin goes way up from 40% to 83%. And according to a 10K, the average number of tenants per tower is 1.9, so there's space to go. And let's look at CAPEX. CAPEX is separated into revenue maintaining and revenue generating. However, there's one thing to take note here. American Tower built their own tower, but sometimes need to deal with permits and licenses. It is easier for them to buy existing tower, but nobody is going to spend money and time to get permitted and build a tower and sell at cost. So American Tower has quite a bit of goodwill on their balance sheet. This is something we should watch out for. Another interesting point is the low churn rate. This is from the 10K, and it says that the churn has averaged approximately 1% to 2%. This is because Once telco signs a lease with American Tower, they don't leave because telco has to deal with the transitioning of network and disruption of service if they leave. And now let's move on to an important point. How is American Tower positioning for the 5G? American Tower is well positioned because of its comprehensive portfolio to accommodate the incremental demand for the towers resulted from the deployment of 600 MHz spectrum. On top of that, American Tower also partnered with Philips Lighting to deploy smart fusion pole for urban deployment. Additionally, it has also formed an alliance with City Beacon to provide digital platform. In summary, there will be continued strong demand for American Tower's macro tower as a result of 4G and 5G mobile network deployment, with future growth coming from other urban solutions. Now let's talk valuation. I've gathered information for American Tower's two competitors, Crown Castle and SBA Communication. First, let's look at price to book ratio. American Tower has the highest PB ratio here as compared to its peers, and it has a relatively high EV/EBITDA ratio of 20 times, and Crown Castle also has about 20 times EV/EBITDA. And important thing here is that the SP500 average EV/EBITDA is 13 times. That means American Tower's EV/EBITDA is actually quite high, and the dividend yield of American Tower is actually lower than Crown Castle. Given the aforementioned valuation, it is clear that American Tower has a higher valuation as compared to its competitors, and this must be justified by higher revenue growth and a higher profit margin. And let's find out whether it's true. Here, the net profit margin for American Tower is double digits and 18% for the most recent year. It is higher than its competitors. And so is ROE is also higher than Crown Castle. ROA also is higher than Crown Castle. And one thing to take note here is the leverage ratio. American Tower has the highest leverage ratio among all. And followed by that, let's look at revenue growth. American Tower has the highest revenue growth and the highest EPS growth. And thus, although American Tower is valued higher than its peers, it also appears to be a greater company with better profit margin and higher revenue and profit growth. And there is the DCF analysis. It establishes the 2019 price target of $163 based on an discount rate of 7.3%, terminal growth rate of 3.5%, private to public discount of 10%. And now let's look at the investment thesis. The upside, first point, site leasing revenue could be stronger than expected. Leasing revenue growth is currently being driven by Verizon and T-Mobile. Upside could also come from incremental network activities from AT&T and Sprint. AT&T spending more aggressively on public safety network could drive higher leasing revenue long term, but it's unlikely to have a near-term impact. Second point, international market could rebound and could drive better growth. American Tower's international market have seen FX pressures, but if currency pressures subside and growth in local markets come in better than expected, then our estimates will likely to need to increase, while we do not expect a substantial increase from current levels. And for the downside, first point, high multiple could contract. We estimate American Tower trades at 19.3 times on an EV/EBITDA basis, substantially higher than the SP500's 13 times average. Since 2002, the tower company have gone from trading at less than 10 times forward EBITDA to 15 to 20 times today. Second point, debt refinancing risk. American Tower has leverage of 5 times, and most of its debt matures in the 2018 to 2026 timeframe. If the credit market were closed or refinance debt carries substantially higher interest rate, American Tower would be negatively affected. Thirdly, further carrier consolidation will impact growth. Verizon, AT&T, Sprint, and T-Mobile accounted for an aggregate of 88% of all US revenue for American Tower. We will view another major merger as a long-term negative for tower companies. However, this may not be likely due to the antitrust law. Lastly, international expansion could create uncertainty. The company could become more aggressive in its international efforts. While we do not model a substantial further investment in these or other countries, American Tower could make a major move which could negatively affect forward cash flow or free cash flow through higher capex and thus reduce potential stock buyback, building up a higher presence in any emerging market in which the wireless industry is still developing and country-specific risks are very different from the ones in the US, could negatively impact the company's risk profile and multiple. And Warren Buffett's investment strategy is buying a great company at a fair price, and thus American Tower fits in these two criteria. Yes, it is a great company with impressive track record, future growth, and strong moat. However, it is not fair price. The high valuation, although demonstrates investors' confidence in its future growth, but also presents much downside risk. That's why I have a rating of hold because of the high valuation of American Tower. If you enjoyed this video, please like and share. Thank you very much.